Hey guys, welcome back. Chapter 2. This is job order costing. It is calculating unit product costs. When we talk about job order costing, you're really talking about trying to encapsulate all the cost by a job. You know, we have different ways of tracking cost. You may have a process cost, like a Hershey's factory, um, and you got to allocate cost per candy bar. Um, for something a little more unique and not homogenous product like that, you're going to have a job that, say, for a house, job order costing is perfect and it encapsulates all the cost associated with that job. Sometimes you may have like an activity that you track. That's activity based costing. And based on the activity, you're going to have certain costs. This chapter here, we're going to get to those, but this chapter here is focused primarily on job order costing. So, job order costing is a cost accounting system that aligns costs to specific jobs or orders, and it's used when products are customized or they're distinct. The key features would be that the costs are tracked by the job, not by the time period or the process. Common in industries like construction, consulting, and custom manufacturing. Some of the product components would be like raw materials that are used in a specific job, direct labor. Those costs are directly traceable to the job, and manufacturing overhead, which would be indirect costs, are allocated jobs at a predetermined rate. So let's say that there's a furniture company out there and that client orders a unique table. It's job number 101. That's going to be the job that we trace this table in. So the cost that we would incur on it would be the direct materials would be $500. The direct labor of putting it all together and building it would be $300. The manufacturing overhead, we would apply a predetermined overhead rate of about $20 per direct labor hour and 15 hours of hours worked. So I was in charge of creating a predetermined overhead rate and at Colonial. That was one of the jobs I had to do. I was a project accountant there, and very complicated. You print it in Excel and it'd be about 4 pages long in terms of all the computations and calculations we did that went into creating a rate that we would bill out entities under the CFR, the Code of Federal Regulations. And so we would have reimbursable projects, and it was a reimbursable overhead rate we were allowed to charge. So those can be pretty complicated, but here we're just saying it's $20 of direct labor hours and there's 15 hours work. So if we were going to calculate this, the manufacturing overhead would be $20 times 15 would be 300, but the total job cost would be the $500 of direct materials, the $300 of direct labor, and the $300 of overhead. So we would get a total cost of about $1,100, and that would be the cost of a table. So if you're selling it at 1,000, you're losing money. You're a nonprofit. If you're a for-profit company, then you got to have your gross margin. Hopefully, it's about $1,500 at a minimum in order to pay for some of the costs. But it needs to be at least over 1,100 at a minimum. I don't know what all the products this furniture company would sell would be and what the margins on each would be. But that would be an interesting thought. So every component would contribute to the overall cost, and it would ensure accurate pricing and profitability analysis. Why that's important to managers is that it would end up providing a insight to them on the cost structure of every job that they're performing. They can understand what's going into it, and everything they change can be significant. Say you're looking at a lumber company, and you are doing 1,000 homes a year. Well, you save if you save $100 per those 1,000 homes, you've saved the company $100,000 just across the board. So every piece of it matters. So you need to really break it down and figure out where your money's going. It also allows the managers to identify any inefficiencies or any cost overruns if we're spending too much or too, if we're not inefficient in an area, it identifies that. It assists in pricing decisions in order to ensure that all the costs are accounted for as well. And a lot of times, managers will compare the estimated or the budgeted cost versus the actual cost in order to refine those results. Um, you're going to control the cost as well by analyzing that overhead allocation, because your overhead might be a higher rate than you want to see. And then you're going to have to dig into what's contributing to that overhead and how do we make it profitable. If you don't make money, you don't have a business. Um, so when we talk about using multiple predetermined overhead rates, instead of a single overhead rate or multiple rates are used over different departments or cost drivers. So a manufacturing company, in this instance, would have two different departments, say an assembly department where the overhead rate would be based on machine hours, and a finishing department where the overhead rate would be based on direct labor hours. The job overhead is applied separately for every department based on the relevant range. The advantages would be it improves accuracy by reflecting differences in how overhead is incurred across departments, and it's more relevant for complex organizations with diverse operations. Um, when we get into the external reporting requirements, uh, the job costs have to adhere to generally accepted accounting principles, GAAP, for your external financial statements. There has to be uh, some level of GAAP used in accounting for the job costing method that you choose as an organization. We still have to allocate the cost properly in order to be able to understand where we're at as a business, and so outside investors can as well. The inventory valuation costs for the incomplete jobs are included in your work in process. So anything at the end of the month that you're not finished with, maybe it's a car, maybe it's a house, it stays in work in process until it's finished. That's when it moves to the finished goods, and then ultimately that will flow to through off the balance sheet into the cost of goods sold once the product's sold. So transparency, accurate job costing ensures that external stakeholders, investors have reliable financial information. Um, and that's sort of from a manufacturing standpoint. When we talk about it from a service standpoint, you actually still use costing even in a service company. So this would be adaptive for service industries where direct materials are minimal and labor is the primary driver, cost driver. So examples would be like a law firm, a consulting agency. Law firms would track hours, to say with CPA firms, according to how much time they're spending on a client, and that is your direct labor. The consulting firms would assign overhead based on the staff hours or the billing rates as well. Um, Service cost components, you'd have direct labor, which would be your direct labor used, and you would have your overhead, which would be like rent, utilities, software subscriptions, anything that would be allocated at a predetermined rate. Well, all that's great. You don't have materials normally in a service company unless you have some kind of product you're selling or something like that. But you're not really going to have materials, but you still need to cost it properly, even in a service company. And sometimes people forget that. In America, we're a lot of service businesses, and there is a cost involved in providing the service, and you need to correctly identify it. So, some of the challenges here would be assigning overhead accurately, since services often lack the tangible outputs, and ensuring over profitability is also a challenge. Um, so we need to properly estimate the labor and the overhead. So, in summary, the job order costing is essential for tracking and controlling cost in customized production or service environments. Managers rely on job cost information to make pricing, budgeting, and operational decisions. Using the multiple predetermined overhead rates will enhance the accuracy, especially in a complex organization. That's very important. And accurate job costing supports external reporting and inventory valuation. The system is used as well for service companies, not just manufacturing companies, although the allocation costs sometimes can be a little more challenging in a service company than a manufacturing company. So hopefully this gives you sort of an overview into the world of job order costing. You guys review this. Again, I'm available. If you have any questions, need anything, reach out to me. I'll help you. You guys take care. Have a great week.